is this IPO really worth all the hype? I mean, Amitabh Bachchan and Rahul Dravid are involved. That's
names.
Pretty big.
Yeah.
But we got to figure out what's actually
Get beyond the celebrity.
Going on.
Yeah, get down to the real source.
Yeah, what's the reality of this situation?
Absolutely. We need to analyze what Swiggy is doing, their growth, and most importantly, can they actually turn a profit from all those samosas and biryani deliveries?
Okay, so first things first. Swiggy's going all in on this super app idea, right? They want to be the one-stop shop for everything food delivery, grocery runs with Instamart, even booking events with Steppin' Out.
Very ambitious.
It is really ambitious.
Yeah, it's a bold move for sure.
Yeah.
The potential upsides are huge. I mean, imagine one delivery person handling multiple orders all in the same neighborhood.
Yeah.
Cost efficiency. Plus, they already have all these users. They can leverage that to promote these other services.
Yeah.
It's cross-selling.
Right. Classic. But haven't we seen this before? I'm thinking about Tata Neu.
Yeah.
They tried a similar thing, and it wasn't exactly
Not quite the home run they were.
Yeah.
Yeah.
Do Indians really want just one app for everything, or do they like their specialized apps?
Yeah, that is the big question. It's a very different market here than in some other places. While super apps have been really successful in like China, Indians just haven't fully embraced that concept. They really do seem to like the focus and convenience of having a separate app for their specific needs.
Okay.
So it's a big gamble for Swiggy. Only time will tell if it pays off.
Speaking of competition, let's talk about Swiggy versus Zomato in the world of food delivery. How do they stack up?
Well, if we're just looking at numbers, Zomato's ahead in terms of the number of orders. But here's where it gets interesting. Swiggy and Zomato are basically neck and neck when it comes to the value of those orders. So that suggests that Swiggy might be attracting customers who are spending more per order.
Interesting. And I've heard that Zomato might have a slightly more user-friendly app, like fewer clicks.
You're right. User experience is key in this business.
Yeah.
A clunky app equals lost orders and unhappy customers.
Makes sense.
Yeah. And it's not just about the features. It's about how easy it is to use them.
Right.
Zomato's search filters, for example, are just more intuitive. And they've got a better way to save your favorite orders. Little things like that can make a big difference.
Right. Absolutely.
Let's talk about quick commerce now. 15-minute grocery deliveries.
Oh, yeah.
The whole thing. This is the new battleground, and Swiggy's Instamart is right there in the middle of it.
Yeah, quick commerce is exploding. It's really remarkable to see. But here's the challenge for Swiggy. Blinkit, their main competitor in this space, is actually ahead of them in a lot of ways.
Really?
Yeah, I thought Instamart was doing
They are.
pretty well.
They are doing well. But Blinkit is winning when it comes to number of orders.
Yeah.
The average value of those orders and the number of people using their app.
Huh.
And get this, they're achieving all of that with basically the same number of those dark stores, you know, those little mini warehouses strategically placed for those super fast deliveries.
Okay, so what does that mean for Swiggy? Are they falling behind?
It's too soon to say they're out of the race. They've got a huge existing user base and a strong brand. But they definitely need to figure out how to catch up to Blinkit.
Okay.
And that means really nailing those key things.
Yeah.
Speed, efficiency, and a seamless user experience.
All right, so let's look at their financials. Profitability is a big question mark here. What's the story?
So the good news is that Swiggy's revenue has been growing incredibly fast, 37% each year.
Wow.
That really highlights how strong their position is in the market and just how much the food delivery and quick commerce sectors are growing overall. But here's the not-so-good news. They are still significantly in the red.
How deep in the red are we talking?
Their losses have actually been getting bigger. In 2022, they lost a whopping 3,600 crore rupees. And in 2023, it jumped even higher to 4,000 crore.
Wow.
Just in the first quarter of this year, 2024, they've already lost about 600 crore.
Goodness.
So if things keep going this way, they could end up losing 2,400 crore for the whole year.
So profitability seems pretty far off.
It does seem like a distant dream at this point.
So what does all this mean for potential investors? Should they even think about this IPO if the company is losing so much money?
That's the big question, isn't it? And the answer really depends on each investor's individual risk tolerance and their goals.
Right.
It's inherently risky to put money into a company that's not making a profit.
Yeah.
Can Swiggy actually turn things around and justify the price they're asking for their shares? That's the gamble.
Okay, well, let's get into the nitty-gritty of the IPO. What are the dates, the price range, all that?
Sure. The IPO opens on November 6th, and they've set the price range between 371 and 390 rupees per share.
Cool. Okay.
So that means if you're a retail investor, the minimum you could put in is 14,820 rupees for a lot of 38 shares.
And what about the first day of trading? Are we looking at a big jump in the price?
Well, the gray market premium, which gives us some insight into how the stock might perform on that first day, isn't looking too exciting right now. And remember, those big first-day gains usually happen when there's a ton of demand for the shares, like when the IPO is heavily oversubscribed.
Right.
We'll have to wait and see how many people actually want to buy into Swiggy.
All right, let's wrap up this part of our deep dive by looking at valuation. How does Swiggy's valuation compare to other companies?
Well, based on that price range we were talking about, their market cap is estimated to be around 87,000 crore rupees. To put that into perspective, we can look at the price-to-sales ratio, which compares the company's value to its revenue. However, remember, trying to value a company that's not turning a profit is really tough.
Yeah.
There are so many factors at play, and it's hard to know for sure if Swiggy will be able to grow and become profitable enough to justify that price tag.
We were just talking about Swiggy's valuation, and it's a big number.
It is.
But they're losing money.
Agree.
So what's going on there? What's driving these big losses? And do they have a plan to fix it?
Yeah, well, one of the biggest expenses for them is attracting and keeping customers.
Mm-hmm.
The food delivery market is super competitive right now. Everyone's fighting for those users, offering discounts, and all sorts of incentives just to get people to use their app.
Right.
And all those promotions can really eat into their profits.
Yeah, it's like a race to the bottom with everybody cutting prices.
Exactly.
But it seems like the companies are the ones.
Yeah, they're the ones taking the hit.
Yeah.
It's classic how competition can really squeeze those profit margins.
Yeah.
And then you got the other big expense. The deliveries themselves.
Right.
They've got this huge network of delivery partners all over the country.
Yeah.
And that costs a lot of money, especially with fuel prices and everything else going up.
So what's Swiggy's plan to make things better? How do they become profitable?
Well, they're definitely trying some things.
Yeah.
One big focus is efficiency.
Okay.
Making their deliveries faster.
Yeah.
Optimizing those routes. Really streamlining their whole logistics operation.
So like every minute saved every rupee they can.
Every little bit.
Optimize helps.
Exactly. It all adds up. But the question is that enough? Do they need to completely rethink their business model?
Right. Or are they just betting on growing so big that they can outgrow these losses?
It's probably a combination of both. They need to keep growing, of course.
Okay.
The more orders they process, the better they can manage those fixed costs. Hopefully, at some point, their revenue will surpass their expenses.
Right.
But they can't just grow bigger. They have to grow smarter. They need to find ways to improve those profit margins at the same time.
Yeah, grow big, but grow smart. I like that. You mentioned diversification earlier, expanding beyond food delivery into things like grocery delivery with Instamart. Is that a good move, or are they spreading themselves too thin?
Well, it's a tough question. Every tech company wants to be that everything app these days.
Right.
But does that actually work? It could make them lose focus or weaken their brand.
Yeah.
But on the other hand, if they offer more things, it could be more convenient for users and keep them from going to the competition.
Right.
So it's a strategy with both potential benefits and risks.
It's a balancing act for sure. All right, we've talked about Swiggy's profitability and their strategy to get there. Let's go back to the IPO for a minute. What are the most important things potential investors should be looking at?
Well, valuation is obviously a big one.
Right.
As we've discussed, their valuation is estimated to be 87,000 crore rupees.
Yeah.
So investors need to ask themselves, does that make sense given their financial situation right now and their potential for growth?
Right.
Is there enough room for them to grow to justify that price tag?
It seems like a lot is riding on whether they can actually become profitable. But what if they can't? What if they keep losing money?
That's the big risk, isn't it?
Yeah.
Anytime you invest in a company that's losing money, there's a lot of uncertainty.
Right.
Investors really have to weigh those potential rewards against the risks and decide if they're comfortable with that.
I think another thing investors should look at is the competition. We've talked about Zomato, but there are other companies out there too.
Yeah.
And the whole food delivery and quick commerce market is changing all the time.
Absolutely.
New companies could pop up, existing ones could merge, things could shift in ways we can't even predict.
Right.
Investors need to think about how those changes could impact Swiggy.
You're absolutely right.
Yeah.
It's a very dynamic landscape. Investors need to look for signs that Swiggy can adapt and stay ahead of the curve.
Okay.
We have a good management team with a clear vision. Are they investing in new technology and developing new products and services?
Right.
Those are all crucial things to consider.
Yeah. So we've got valuation, competition, and profitability. What else should investors be thinking about?
The regulatory environment is a big one.
Okay.
The rules around food delivery and quick commerce are still being developed.
Right.
Governments are trying to figure out how to regulate these platforms. New laws could come into play that could impact Swiggy's business.
Yeah, it's a whole other layer of complexity.
Exactly. It's constantly evolving. So investors need to be aware of those potential risks and factor them in.
And then you've got the overall economic climate too, right? Inflation, interest rates, economic growth.
Those things can have a big impact on consumer spending,
Right.
which could slow down the growth of these sectors.
So it's not just about Swiggy itself, it's about the bigger picture.
Precisely. It's a complex web of factors.
Right.
Investors need to look at everything when evaluating this IPO.
Right.
Go beyond the hype and the headlines and really dig into the fundamentals of the business, the competition, the regulations, and the overall economy.
Okay, so there's a lot to consider.
There is.
But that's where we do these deep dives, right?
Exactly.
To help people understand everything and make their own informed decisions.
Investing's a personal decision.
Yeah.
There's no right or wrong answer.
Right.
We just want to give people the information they need to make the best choice for them.
Well, we've covered a lot in this part of our deep dive. From Swiggy's path to profitability to all the things investors should think about with this IPO. Coming up next, we'll wrap up our discussion with some final thoughts. Okay, so we're back for the final part of our Swiggy IPO deep dive. We've talked about their big plans, the competition, and of course that question of whether they can actually make money. So let's bring it all together. What are the key things you think our listeners should know if they're considering investing?
Well, if you take a step back and look at the big picture, this IPO is really about whether online food delivery and quick commerce are going to take off in India.
Right.
It's a market with huge potential, but there are a lot of unknowns.
Yeah, so investors need to balance that potential for big rewards with the risks, especially the risk that Swiggy might not become as profitable as their current valuation suggests.
Exactly. And they need to really think about the competition. Can Swiggy keep up with Zomato and Blinkit and all the others? Can they hold on to their share of the market?
It's a fascinating game. It's not just about being fast anymore. It's about creating the best experience for users.
For sure. It's about building a brand that people really connect with, making things super convenient, and offering something that goes beyond just delivering food or groceries.
So what does all this mean for our listeners who are trying to decide whether to invest?
Honestly, investing in an IPO is always a bit of a gamble.
Right.
And this one is no different. There's a chance for big wins, but there's also a chance you could lose money. So people need to do their homework carefully, weigh the pros and cons, and decide if this investment fits their own personal risk tolerance and their financial goals.
Okay, so here's something I've been thinking about. What about the things you can't really measure with numbers? What are some of those less tangible factors that could really make or break Swiggy in the long run?
That's a great question. Innovation is key. This whole world of online delivery is constantly changing. What's popular today could be old news tomorrow. Can Swiggy stay ahead of the game? Keep coming up with new ideas, new products, new services that keep people engaged and excited.
It's not just about the technology, though, is it? It's about understanding what people want, anticipating their needs, creating experiences that they really love.
You got it. It's about building that emotional connection with customers, creating a brand that they trust and feel good about. That's where the real magic happens.
So one final thought for everyone. Even if Swiggy becomes super profitable and becomes the biggest player in the market, can they keep it up? The world is always changing. So as always, do your research, think about your own risk tolerance, and happy investing.